Go.
Good morning, everyone, and welcome to Quantum Leap Morning Market Review and Trade Plan Setup. It is Thursday, September the 5th, 2013. It's my daughter's 16th, sweet 16th birthday. So happy birthday, Jaden. Let's get the information, the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. The trades that you see today are for education purposes. Please trade your own plan, do your own due diligence. All right, so each morning we come together and we go through our normal market routine, which involves going through the key numbers. If you're watching this video and you don't want to go through this, you can skip ahead. But we do this because it creates a winning habit and gives us thinking about the numbers. So in terms of the year, we have a year high of 1705, year low at 1443, and year open of 1443, and a year low of 1438.25. Our monthly open, 1640 and a quarter. We have a monthly high at 1655 and a quarter, a monthly low at 1630.75. Our previous month opened at 1685. We have that all-time high, last month's high, and year high at 1705. We have a previous month low of 1624.75 and a previous month close at 1632.25, and we're currently trading above both the low and the close of the previous month. Our week open this week on Sunday night, 1640 and a quarter. We have a high 1655 and a quarter. We have a weekly low at 1630.75. Previous month open, previous week open 1660.75. Previous week high 1667.50. Previous week low 1624.75, and we closed at 1632.25. Nothing changes in the quarterly, so we'll go right to the intraday. Yesterday in the Globex we opened at 1638, which was a lower open. We had a Globex high at 1642.25, lower high. We had a lower low at 1635, and our RTH open was lower at 1638.25. We had an open test drive in the morning for the opening swing. We had a normal variation. We broke the IB to one side. And our opening swing was 1639.50. Opening swing low 1635 and a quarter for 4.25 point open. And this open was, not conducive to what we thought was going to be a rotational day that turned out to be basically a trend day. Our initial balance 1647.25 high, initial balance low 1635 and a quarter, and we had a 12-point initial balance. Our 1230 number was higher at 1654 and a quarter. Our RTH higher was 1654.75. Our RTH low 1635 and a quarter. Our close was 1653.75, and our VPOC was 1652.50. So you can see we've been going up and down, up and down, up and down in this balance area. Our RTH range 19.5 points, two big days, 19 and a quarter and 19 and a half. Our full session high, full session range 19 and 3/4, and our Globex 7 and a quarter. Our full session high 1655 and a quarter put in the RTH. Our full session low 1635 was put in the Globex. We only missed the Globex low by one tick. We had our RTH low at 35 and a quarter. Our 20-day ATRs are expanding still, 14 on the RTH, just over 16 and 3/4 for the full session, and our Globex just over 9 and 3/4. Our Globex open last night was 1654.75. Our European cash 1649. That's the 1030 number. All numbers in here are central. Our value area high 1654.50. Our value area low 1647 for a 7.5 point value area. And we broke the IB to the high side inside the pocket at 941. Our extended session high 55 and a quarter. low 53.50, and we had settlement at 55 for a 1 3/4 point extended session. And our ETH range 20-day 1.44, and we had again fairly decent volume, 1.4, 1.6 respectively. Nothing really shifted in terms of the composite and the CLVN numbers. Our microcomposite still is there at 1637.50. I did not include yesterday's volume. We broke out of the balance, so I have yesterday as a breakout day. Our naked crosses, we added 1639 and 1652. We took out two naked VPOCs at 51 and 37 1/4, and we added 52.50. Of course, we just had our news. We had better unemployment and worse non-farm, but we got a little bit of a spike off of that. We've got ISM non-manufacturing at 9, factory orders. We've got natural gas at 9:30 and crude at 10. So we got a bit of news coming out. Of course, we've got all kinds of headline news with the Syrian debate going on now that they've approved the U.S. to go to war. Let's go over, take a look at our macro to micro charts. We like to just take a look at where we're at within the overall trend. You can see that the monthly trend is still very much intact. We had a nice pop. We're now trading in the middle distribution of last month. Good slope and separation on the 9 and 20. Trend is intact on the monthly. The weekly, we've come down, and we had gotten below the 20 SMA, and we popped back up. Now we didn't continue to stay below. We're now coming up and testing the 9 EMA, and we've got still got a possible head and shoulder pattern, but it is looking much stronger. On the daily, we had that downtrend. We had slope and separation to the downside. We had two tech gaps that were closed, and we've come up and tested the 20 SMA from below, and we're currently trading right on it right now. So this could be a possible trend change on the daily. Taking a look at the forks, you can see that the long-term upward sloping fork, we've broke down and got below it. We came off of the downward sloping fork, and we're coming down to test the center line. But we're, this new modified shift fork that I've got is holding, and we've got this energy point, and that energy point is my main target today above at that 78, 79 level. Taking a look at the trend in the intraday, obviously we've had some consolidation. Yesterday we popped up and we created this tech gap. We came down and closed the gap right here this morning, and then we popped off of it. And we're getting slope and separation to the upside. So this, we're in a new intraday uptrend on the 4-hour. Going to the 30-minute. 30-minute has that coming up, and now we're getting consolidation going sideways. We've lost slope and separation, but we are trading above the 9 and the 20 right now. Let's just go down quickly to the 15-minute, and you can see it a little bit clearer. We came back down and tested the 9, but bounced off of it. Going over to the composite, well, we were inside of this balance area, and yesterday we had a really nice trend day, and we've broken out of that balance area, coming up towards this microcomposite VPOC of the last balance area. We're inside the value area from the prior microcomposite at 47.50. We're currently trading 54, right around that 53.75 CLVN, and coming up to test. I have high probability that we come up and hit this 55 mark, whether we do it prior market or on the open. I'm anticipating moving up. If we get above the 55.75, I'm looking for a move up towards the 58.59 level, and test the other side of that balance at 60.75 with the value area high at 62. Above 62, then I'm looking for a test of the big, the big CLVN, which is basically separating the, this blunt area of the profile, which is now not so blunt. It's becoming much more pronounced. But we've been watching the 67 CLVN and this 27 as the two sides, between these this blunt area. But I would imagine we'd come up and test this, and then above that we've got the 70.25, which is the microcomposite, the most accepted price before we launched to the upper balance and the bigger balance up here that ran from 718 through to 814, and the microcomposite VPOC up there at 1687. Keeping in mind also that we have that energy point in around that 78, 79 as a guide as well, as a target. If we get back below the 54, then I'd be looking for basically chop in between 50-50 and 44-45 area, and come in and have an inside day. And there's a good probability that we stall out. We had a big move, 19.5 point move yesterday in the RTH. We could just come up, tag this 55, find some sellers, come down and chop around between the 37.50, which is our microcomposite VPOC, 44.25, 47 and a quarter, and 50-50, and just have an inside day. So we've got to be wary of that. If we do have some negativity coming in and we get below the 35.25, then I'd be looking for a move back down into that 33.31, which was the former microcomposite VPOC before we added in Tuesday's volume. And then a push to the other side of value. The value area low of that is 29, and that CLV at 29.25, and the big one below, which is 27. Below 27, I think we test 24.75, the microcomposite low, and come down into this area and come down into the 20.25. I don't expect to have much more movement to the downside to that. But the other side of the balance around 20.25 is the 15.17, and you have to bring that 7:05 date in, which is the profile date for down here in this area. Let's take a look at the overnight. We move our numbers over. We do have a P-shaped profile. So that is indicative to short covering and likely to come down and do some repair down here, and that's why I'm looking for more of an inside day. But you never know, we could continue upwards. We've got pretty strong overnight inventory. Is pretty balanced overnight. We traded in around this 53.75 CLVN as they battled the bears and the bulls, and long-term price rejection turns to short-term price acceptance, and we get our VPOC overnight at 53.75 right on that CLVN, and currently where we're trading right now. And also is going to be our close, gap close is 53.75 as well. Our overnight high, 56.50. Our overnight low, 50.50. So we had a pretty tight overnight so far. So we've got a good probability of taking out both these sides. I'm going to be looking to do business right here in the 54.75, looking for a move to take out the overnight if we break out of the RTH range from yesterday. If we come down here, I'd be looking for a move down to take out the low at 50.50. I'll be looking to do business in around here, the 48 area, for a possible first bit of buying coming in. But if we don't find some buying, then I'm looking for that move down to that 45, 44 level. And then, of course, if we get down there, I'm not thinking we will, but I'll be looking to do business in the 35.25 level as well. And then I'll be looking at this 37.50 area as well as a possible area for buyers to come in and find some support. Other than that, I think it's going to be pretty choppy in between, and I'll be looking for setups. Our value area high for yesterday, 54.50. Our value area low for yesterday was pretty tight at 47. So we've got a pretty tight value area. I'd expect to hit both sides of this value area if we stay inside of the yesterday's range. Of course, if we break out, we've got naked crosses at 62.50, 63.50, naked VPOC, and then a naked cross at 64.75. I forgot to go get my naked crosses, so let's just take a quick look at what we've got on our charts. We've got one right here at 53. Again, that's going to get taken out in the opening swing, most likely. That one was taken out. Let's take a look at the 30-minute. We still have this one down here at 39. And nothing else I can see there. And let's go to the 5-minute. That's taken out. That's taken out. That's taken out. We really don't have any other ones on the 5-minute. So we just have the two that we need to add in. I'm not going to bother putting the 53 in because it's, going to be taken out right on the open. We've got our prior naked VPOC at 52.50 from yesterday. So within the open, if we stay and open up in this area, we're likely to take out those. But we do have the one down at 39, which I want to put in. And a naked cross, for those that are new, is where the 9 EMA crosses over the 20 SMA and the price action moves away without testing that number. It acts like a naked VPOC. The market has a very high probability of coming and taking that number out. So we use them as targets, and we look for clusters of them with naked VPOCs as as areas that we want to look to scale and trade back towards. Taking a look at the Keltner. Keltner is going pretty much sideways. Center line is 53.25. Again, likely to get tested on the open. Test of the upper Keltner line will take us up to that 59.50 CHVN. Test of the lower Keltner will take us down to the 47.25 CHVN. So, but we're not showing any slope or direction on the Keltner channel, so it's likely to get choppy on the open. That's everything I've got. Howard, we'll go over to you, and then we'll come back and take a quick look at gold before we get set up for the open.
Thank you, Doug. So let's take a peek at the weekly chart. And as we can see, the last 2 weeks we had price mostly constrained between the 9 EMA in red and the 20 SMA in this dashed magenta line. So far this week we tested below the 20 but have come up, are currently testing the 9. So for the 3rd week in a row, price is mostly respecting these two moving averages, which are converging. With the move up yesterday, it slowed the descent of the 9 EMA, where it's moving flat now. The 20 is still moving a little bit higher. So those are still key levels for today and tomorrow. So we'll see what happens today. Looking at the daily. We had been below the 9 EMA a couple of days ago. We closed above it, closed back below it. Yesterday, back above it and tested the 20 SMA coming down. As you can see, the 20 SMA a couple of days ago crossed below the 50 SMA. And then overnight, we've tested the 20 higher, and came back and currently are pretty much right on it. So similar situation for the day and the week, where the 20 SMA has now become a resistance area. So we'll see if we break through that. The 9 EMA, we've broken above it. They're starting to converge here as well. So in terms of Elliott wave counts, I'm looking at my same hypothesis I've discussed the last few days. Let me turn on the pen here. So what I'm seeing is this is a first wave, a second wave, a third wave, a fourth wave, and then we came down to complete a fifth wave. And we can see that so far the retracement here is behaving like a corrective pattern. We have a lot of overlapping, choppy structure here. So I'm thinking those first 5 waves down are forming a wave 1. We are potentially in the process of forming a corrective wave 2 pattern, and I have a target, first target here at 1664.75. If we get above that, our next target above, excuse me, 1674.25. So, roughly between 1665 and 1675, and that 75 level is probably within a few points of that energy point Doug was talking about earlier in this fork chart. So there's some confluence and methodology targeting there. So that's what I'm looking at. So if this is the first wave down, then I would be looking for a choppy corrective wave somewhere up in this area as a target. And if the hypothesis continues to play out, then once it hits this target, then it should start rolling out and start a continuation of the move down from the year high. So, just see if the market plays out that scenario or not. So next, let's take a look at market breadth. So this is the transports versus the industrials. Both of them curved up yesterday, and it's been typical. When the market moves higher, the transports move higher, faster than the industrials, and when the market goes lower, they lower faster than the industrials. So we're continuing to see that play out between these two indexes. So looking at the on-balance volume, pretty much playing out in sync with price, so no non-confirmations or out of the usual situations here. Let's look at the sectors. So we can see most of the sectors participated in the move up yesterday. Just one exception looks to be the utilities, which have moved back below the home builders for last place. So with that exception, all the other sectors did participate. So looking at utilities, they had weakness early. They had a rally. Now they're showing weakness again. Home builders have been the most volatile sector. Retail had been declining significantly from its leadership position, but never gave it up. And it's leveled out here and started climbing back up. Healthcare making a challenge for first place here. So it looks like, yesterday, with the exception of utilities, the sectors are in sync with the market. Finally, we'll look at the advanced declines and up-down volume. And as I've mentioned earlier, we saw a bottom in these indicators, which are on a 10-day average basis, occurred on August 19th. And so they started strengthening from that point. Even though price was still on its way down, we saw sort of an early indication that the market was forming in the process of forming at least an interim low. And both up-down volume and advanced declines have moved above the break-even level of 50%. So, we saw our first indication that the market may be slowing its descent, getting ready to at least form an interim bottom down here. Just like when they formed a high here and started a consistent weakening in these indicators, price lagged it a bit up until here, and then started its corrective structure there. So if we are forming a wave 2, then we have a 10 to 20 point possible continued rise before we hit one of the two targets above. And then we'll see if the hypothesis continues to play out, if it does get to that level or not, and turns back lower. If not, then we'll look at alternatives in terms of structure and what the count may be from there. So with that, Doug, I think that's all I've got. Turn it back over to you.
Thank you, Howard. Okay, let's just take a quick look at gold. Yesterday we were talking about the fact that we had the microcomposite going into yesterday at 96.3 area with the former microcomposite from the larger composite at 88, and then we had the value area high at 16.4 and value area low just above that 88. And we had talked about probably coming in and trading inside of this area between the 88 and the 96 with a possible high around that 16. And you can see we traded inside yesterday on gold, bringing in yesterday and today's. It still has the microcomposite at 96.3. Value area low is 88. Value area high is 1440. Still looking for some chop in here. We're currently trading right at that 88 area. If we get below the value area, look for a move down to this 82.40, and then if we break out down to this 77.3 with the lower end of the microcomposite at 73.90 and the big target below at that 1366.30. I'm anticipating a move up in gold a bit today to test that 1400. If we get above that 1400, the CLVN here at 1399.9, look for a move back up to 14. And then if we break out of 14, look for a move to go up to that 24.50 area, which was the fractal high on this last swing high here, and then a move, if we continue through that, up to the 34 with the big resistance above at 1439.90. If we get above that, and we get a strong move up, the big target above is that former balance area above that we tried to hold value in around that 1468.40. So again, just looking for continuation and maturing of the distribution in this area around gold right now. Not looking for a really big day. I'm anticipating I'm going to get long again. I've been playing the centennial numbers. I'm going to get long with a break above 1400 again, with a move to 1440 as my initial target, and then hopefully catch a swing trade on gold again. Now I want to talk about yesterday. I did not trade well yesterday. It turned out to be a trend day. I was not anticipating a trend day. Trend days typically are my worst days. We started the month really well on Tuesday. We had took 10 points out, pretty decent day, trading a 2-lot. Yesterday, I missed the initial move. I planned to try to buy off of this 35 and a quarter, but it happened right on the opening swing, and I was trying to be a little bit patient, and I missed the move. I ended up getting long when we broke above that 40 level, and I was able to catch some of the move, but after 3 points, and we had a 9-point move at that point in time, or I think it was even close to 10. I decided that I was going to get out of that because I was looking for a rotation back to the VWAP, and it didn't come. And then I missed the rest of the move, and I took 3 shorts, but I let the day get the best of me, and I went completely off of my trade plan. This happens to every trader. Even anybody that's been in the room knows for any length of time that I haven't had a day like this in a very long time, but it does happen. And last night I did some serious journaling, and I reviewed every inch of the day that happened, and I know exactly where I got too loose. Then I was pushing trades. I had guests in the room like I do today, and sometimes when that happens, I go off my plan because I'm trying to put trades on where I shouldn't be trading. And I finally stopped fighting the trend and got long, and then they came out with that headline news. This is a typical example of where headline news can kill you, and you need to control your risk. But overall, it was a loose trading day. It does happen. You just have to regroup, go back, and make sure that the next day that you trade, that you're sticking to your plan, and you're not letting the monkey take over like it did yesterday. So, but again, it's rare that it happens. It did happen. I don't hide anything in here. You guys see all the good and the bad. Yesterday, you got to see lots of bad. But overall, between the gold trade on Tuesday and the ES trades, I'm up overall for the month. I'm just not up on the ES right now. We lost 15 3/4 points yesterday. We had 10 points on Tuesday, so I'm down 5 3/4 points in the room as in terms of the official trades in the room. But we've got lots of month left. I'm going to go back to my plan, trade my plan, and make sure that I stick to it and be very patient and not try to push trades. Anyway, that is going to complete our Monday.
Hey, Doug.
Yep.
If I could just make a newsworthy comment here. The G20 summit is about to begin in Russia. President Obama just arrived. And one of the tags on the screen was Putin is calling Secretary of State Kerry a liar when it comes to Syria. So
that
ought to be an interesting morning.
That should be good. So just make sure that you're patient and keep it light and tight on the open. There's likely to be a lot of headline news coming out of that today with the Syrian action. That is going to complete our morning market review and trade plan setup for Thursday, September the 5th. As always, trade well, trade safe, and we will catch you on the flip side.